Stimulus to fuel a housing price surge. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from ABC News discussing a house price surge in Australian capital cities driven by government stimulus. Now, if we just pull apart this title, just think about this, a surge in house prices. Well, house prices have arguably been surging for some time. The affordability of houses compared to the normal wage is just ludicrous. You can see here, look at that growth. Unquestionable. Anyone could argue that our housing hasn't been surging. You know, what was it? We were reading before yesterday, like over 400% growth in the last 25 years. So the previous generation has really had, well, a good situation, a good go of it, of, you know, making significant coin off buying property. Now, the problem is, government is pretty much addicted to property. Australians are addicted to property. Everybody thinks, and sadly it seems to be the best and easiest way to get ahead in this game is just property. Right now they're chucking home builder at property. They're allowing people in the construction industry and every other industry to trade while insolvent. State governments are giving discounts to stamp duty, the cash rate. Oh, the cash rate. Let's bring this up here, which is at a brilliantly high rate of 0.1%. We were looking at a piece from Aussie Home Loans a couple of years ago, and they were saying record low rates of 5% variable. Cute. Seemed quite funny. Now look at the rates. Look at what we're at. So government is stimulating the housing sector, property more than anything. People are just lining up. Now the problem with this is, where does government get their money from? Do they just magic it out of nowhere? That's what the MMTers will let you believe. But do they, draw it from huge reserves of resources they've put aside? No. Is our government really an American corporation like some people think? Nope. Although, that ties into this. Looking at that American corporation that the government set up, which was set up to provide an opportunity for our government to access other source of funds, if you look at what is backing up their claims, it's us. That's what it is. All the stimulus, all the money that government gets is backed up by us. Our future labour will be devoted to paying taxes in one way or another. They may call it a levy, they may call it a surcharge, they may call it an excise. They'll just tax us. So it'll be work that we have to do now in future generations to pay for this stimulus. So you've got younger people which are paying taxes, and sure, older people do too. But the problem is, because we have negative gearing here in Australia for housing, it's a very effective means to avoid or reduce your tax burden. And I don't blame anyone who takes advantage of it. But you get this perverse situation where you've got a class of people who are struggling to get in to property, saving like frantic. Their deposits that they're saving now are probably equal to the entire amount previous generations had to pay. But we don't even mention that. Don't worry about that. So they're saving frantically, paying tax, even paying tax on the interest they earn, saving to get into housing. And then you've got people that own a house, then maybe 2 or 3 more, and negative gearing the investment to offset their tax burden. So you could see the people who are getting the advantage of the stimulus, those already in the property sector or invested into it or working in it, may not even be paying as much back, depending on negative gearing. It can be quite a messy situation, unfortunately. So you've got those slaving away, paying all the taxes to prop up an industry which is essentially just pushing the property further out from their reach. There are a lot of people that are hoping for a correction in the property market because they know what the quality of their builds are. They know that it's overvalued. But they're scared that it'll just get pushed further and further out of reach. How much more can the government intervene? How many more? Who would have thought trading while insolvent would be put forward? That wasn't even on my... I wouldn't even think that would be a prospect. The average punter doesn't appreciate how much of a deal that is. Unless you've run a business, unless you've had someone stiff you on money and you've had to chase them down and tried to go through that process, you don't appreciate how bad deal that is. That's one of the advantages of dealing with a company, because then the director, if they're trading while insolvent, they're personally liable. So, crazy. What else can they do to change the rules to keep property going? So let's have a look at this article. House prices, which are already making a strong recovery from the recession, are likely to get more expensive in 2021. Australian capital cities may see prices surge between 5 to 9%, according to a new report by property analyst SQM Research. It said interest rate cuts, an aggressive government stimulus, and the winding back of responsible lending laws will be the main factors driving these price rises. These predictions coincide with the latest figures from the Bureau of Statistics, which suggests demand for property has reached fever pitch. Or is it a mania? I mean, do we know anything else in Australia? This is the problem. This is why, if you watch my shows regularly enough, you'll see I keep prattling on about the complexity of our economy. And you know what, actually I'm going to show you something. I'll show you something. I showed a picture of this here, a few days ago. So this is a Gitzo tripod. You can see the top there? See how that's broken? We use this. It's a carbon fiber shaft with a little cast thing at the top, you know. And I thought we use this for our point cloud scanning. You know, I rent out the scanner and equipment. And fortunately, the Faro that we have, I can just put on a normal camera tripod, which is rated to it. So this isn't the end of the world. But I rented it to a client yesterday or the day before, and you know, this happened. It broke. It happens. I posted it on the comments going, you know, I've ordered a replacement part, and to get the replacement part, I need to order this much of it. From here to here. So this is attached. I was hoping I could just get away with only this. Anyway, 8 weeks from Italy. 8 weeks from Italy. No one in Australia had it. No one had the parts. I think one viewer said they had a spare. But I mean, it's okay. I'll get it from Italy. I'll get it shipped over. It's not too expensive. But 8 weeks. There wasn't even anything in stock here. And at least none of the suppliers in Queensland. So that's where I fall back on arguments of economic complexity, where what incentive is there for anyone to start a business, to start manufacturing advanced, you know, tripod components or looking at using carbon fiber to make great things, when you can just chuck it into housing and make a better return, when there's less risk, when the government will do everything in their power possible to support you, when they will change the rules, when they will literally throw money at every citizen to encourage them to jump in. That's the problem. That's the problem with all of this. When you've got negative gearing set up to encourage people, where they can make a loss on a property and then offset it on other things. You know, and this is the problem. We're stuck in a trap now. What's going to happen when, you know, you've got a generation struggling to get in? What if they inherit all this wealth from their parents? Will there then be a political will to realign, to adjust, to allow the market to come in and correct? Or will there be more people striving to maintain the wealth that they've gathered? There's the question I put to you. The data shows the value of new home loans climbed to a record high of $22.7 billion in October. It was slightly higher than the 0.7% than the previous month, but a huge jump, 23.3% compared to the same period last year. So capital cities to surge. Perth is expected to be the star performer, with gains of 8 to 12% on the back of a recovering commodities market and mining projects investments. Sydney is tipped to experience the second largest price gains, driven by proposed changes to New South Wales stamp duty and land tax laws. At the other end of the spectrum, SQM said Melbourne would be the weakest market due to extended second wave lockdowns and a number of business failures, and a weak job market compared to other capitals. The ongoing international border closures, combined now with evidence of current interstate migration outflows, will also put Melbourne at a disadvantage, SQM wrote in its Housing Boom and Bust report. This is how it expects all the other capital cities to fare. Okay, Perth, in just 2021, okay, best case, 8 to 12%. Sydney, 7 to 11%. Adelaide, 6 to 10%. Darwin, 6 to 9%. Canberra, 5 to 9%. Brisbane, 4 to 8%. Hobart, 3 to 7. Melbourne, 2 to 6. And the average of capital cities between 5 and 9%. What's wage price What's wage growth, guys? 1%? I'll bring up my favorite chart, showing all this, the failed calculations now. Remember, we're entering, we've had a recession. We've had 2 quarters of negative growth. There's going to be a flow-on impact of that. The problem is they've thrown so much stimulus and intervened so much into the economy, it's not able to correct. And the question I put to you, fundamentally, is this moral? Should our government be intervening to this extent? Think of the long-term consequences. So record high prices in smaller capital cities. Earlier this week, another property research firm called Logic said the median property price in Melbourne had lifted 0.8% to $565,000 in November. It noted there was a major difference among capitals. Prices in Brisbane at $515, Adelaide at $459, Hobart at $505, and Canberra at $672 jumped to record highs in November despite the pandemic. The firm also said Sydney and Melbourne's average prices have fallen back to where they were in early 2017 at $860,000 and $672,000. So Sydney's definitely not at the level it was when it hit $1 million at the average price. Remarkably, Canberra's median of $679 had climbed higher than Melbourne's for the first time. On the flip side, Perth and Darwin housing values had been plunging for years before they started to recover recently. CoreLogic said median prices in WA and NT capitals were back to where they were around 2006 and 7, at $465 and $406. So boosting property at any cost. It feels like it. It really does feel like it. Yeah. However, SQM's base case assumes the nation may be plagued by a third wave of coronavirus infections, more lockdowns, and a progressive rollout of the COVID vaccine. It also assumes the Reserve Bank and federal government would be forced to ramp up stimulus programs. In particular, SQM is expecting the RBA to keep interest rates near zero and pump even more cash into the economy, while the government will be forced to extend the JobKeeper wage subsidies by an extra 6 months to September 2021. What do you reckon, guys? We've seen Home Builder extended. Why not JobKeeper? Even in its most pessimistic scenario, SQM predicts capital city prices will either remain flat or rise 4% at most. The different assumptions in that scenario are that the government phases out JobKeeper in March, as planned, unemployment benefits fall back to pre-COVID levels, and the RBA doesn't inject more cash into the systems. SQM's managing director, Lewis Christopher, said he had misgivings about the long-term consequences of these stimulus measures. If housing is regarded as an asset class and is not allowed to fall, Australia could have some rather serious social issues surrounding home ownership rates over the long term. And I honestly, this is the class divide in Australia. Okay? It's home ownership. You're either a home owner, that's it. You're a renter at the bottom of the barrel. Then you're one step up, you may be a homeowner with a mortgage. Then you're another one up with a homeowner with no mortgage or with investments negative gearing that away. And then you just keep going higher. I think that's our class structure here in Australia. We looked at literally a house 3 doors up. Looking to rent it. And the amount of BS they want you to fill out, all these forms and things that they want to give you to a third party. And we said, no, we'll just pay you all the rent in advance. How about that? You want us to do up our house, it'll increase the value of your investment. There's your argument. Oh, I can see that as frankly driving people to buy a loan, just not having to deal with real estate agents and inspections and all that BS for a fallen down house. I've got my own falling down house. I don't need to go and kiss your ass to get into yours. Maybe I do. That's the market. Many in the community are starting to think they cannot lose on housing, that the government will always be there to step into the housing market if need be, and that is a scary idea. Yes, that's a terrifying idea. And that's the question there. Is it moral? Have we given the government too much power? Federal government. This is just another way of redistributing. Here's a novel idea. I think this is going to sound really crazy. What about you get rid of all income tax and you just have land tax? Just tie it to your property, so only the landholders pay, and then let's just go full old school, and then you get a vote if you as part of the privilege. Yeah, I don't think people will like that. It'd be interesting to see what happens, though. Probably be more and more of the same, just shifting more benefits to the landholders. Feels like it, doesn't it? It really does. First home buyers driven by FOMO. Yep. Early this week, the Reserve Bank Governor Philip Lowe told a parliamentary committee it's actually a good time if you're a first home buyer to buy the property you've wanted. But first home buyers may already be one step ahead of him, according to the ABS lending figures. In October, the number of first homeowners on owner-occupier loans increased by 13,481. Although it was much higher than months before, plus 3.4%, the ABS noted this was an enormous jump of 30% compared to any pre-COVID figures. The ABS pointed out 11 years ago, first home owner grants was temporarily tripled as part of the Commonwealth Government's economic stimulus package in response to the GFC. FOMO, fear of missing out, must be creeping back into the psyche of first home buyers as they follow the bullish commentary on house prices through to 2022, said CanStar financial analyst Steve Mickenbecker. Investment lending continues to lag, only 2.8% up from last year. I mean, that's the thing. Why would you want to invest when you can't get anyone to rent your property, or there's a moratorium on kicking out bad renters? Investors will be looking for lower vacancy rates before they are likely to jump, and that could be quite some time off with the recovery of migration, overseas students, and international tourists looking beyond 2021. So a stimulus-driven construction surge, and we can see this here in building approvals. Look at the blue line, guys. Look how that's surging up. That's residential. Construction was also an area of high demand, according to the ABS latest data on home lending. The value of construction loans jumped 10.9% in October compared to the previous month, but since July it has surged 65.6%. The ABS observed this coincided with the introduction of the government's Home Builder grant in June. Home Builder and other construction grants led to a decade high for growth in owner-occupier lending for the construction of dwellings. ANZ economist Adelaide Timrell and Felicity Emmett wrote in a research note, the noted construction loans had skyrocketed by 86% compared to 2019. Yeah, I mean, that's Home Builder, guys. This is what happens. They're going to overheat it again. The growth rivals the post-GFC spike in lending constructions. So too much borrowing. In late September, the Morrison government announced plans to water down responsible lending laws to mitigate the effects of the recession. At the time, Treasurer Josh Frydenberg, then why do we even have the laws? Why do we even have all of these rules in place? Who cares about people trading while insolvent when the government can just change it willy-nilly? Why are we worried about even having responsible lending laws just put on the individual? Come on, keep going, guys. You're going there. Just keep watering it down more. You know? But then they won't step in they won't let the market play out and self-correct. At the time, Treasurer Josh Frydenberg said the changes would significantly cut red tape and would ensure there would be no unnecessary barriers to households and small businesses wanting to borrow. On Thursday, the latest GDP figures showed Australia's economy had recovered sharply and was no longer in a technical recession. The primary reason for scrapping responsible lending laws was to free up the flow of credit, Rate City's research director Sally Tyndall said. Looking at today's lending figures, it's hard to see where the problem is. House prices are on the rise, housing finance just hit a record high, and first home buyers are finally making their mark. We don't need to throw out the current legislation and risk people getting into debts they can't afford to repay. Well, isn't that the responsibility of the individual? We need to start having more individual responsibility, but it's not the Australian way, is it? Not at all. So what do you reckon, everyone? I mean, do you think this will play out? How much intervention is the government going to do? And remember, you may be thinking, fantastic, my property's going up, but then just wait till the valuation of it goes up, they change over to land taxes, and they start siphoning money of you out of them to pay for the stimulus. Nothing's free. Nothing's free. All of these interventions in the market are just unnatural and mess it all up. That's what the government's doing. They generally make things worse than better because they appeal to emotions and they're too afraid to allow the market to correct. They're people that are hoping a drastic fall of property or desperate for one because it's the only chance they'll have to get in and pay off within a reasonable time frame. What do you think? Anyway, guys, Let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. Do you think we will ever get an increased drive of economic complexity in Australia here? You know, the calls for a manufacturing to return. Do you think that will ever happen when there's just more incentive to buy and hold property? What do you reckon? If you want to support the channel and you like the content I create, there are a few ways you can. You can simply interact with the channel and help us grow and spread the videos. You can support us financially by joining on YouTube or Patreon using any of the affiliate links you find below from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy our merch from HeiseSays. We make our very own pocket squares. You can see one behind me. Or from Teespring, where they get the mugs you can see below. You can support us using Gold Pass or the Perth Mint as well. Or from the Perth Mint or PayPal as well. Take care, have a great day, and I will see you all next time.